Welcome everyone to the Pineapple webinar series. We're featuring RPS, Real Property Solutions today. We're going to give everyone a minute or so to get into the webinar, and then we'll get started with Melanie Roth, our Director of Training here at Pineapple. So we'll just give everyone just a quick minute. Thank you.
All right, I think it is time that we get started. So good afternoon, everyone, and welcome to Pineapple's monthly Realtor webinar. My name is Melanie Roth, and I'm the Director of Learning and Development here at Pineapple. We're thrilled to have you all today, and we hope that you'll find this session informative and valuable. As you know, Pineapple works closely with our trusted realtor partners who collaborate with our mortgage agents and brokers on a daily basis. We are committed at Pineapple to providing our realtors with the most up-to-date industry knowledge, which is why we have invited some of the top industry leading experts to speak at these webinars. Before we get started, I have a few announcements I would like to make. First is we will be addressing all questions at the end of the presentation. So at the bottom of your Zoom link, you will see there is a chat section. This chat is where you will post any questions you have throughout the session, and we will address all of these questions, as many as we can, at the end of the presentation. Rob, if you don't mind just going to the next slide for me before you get started. Thank you so much. Before we get started, we wanted to let you know about an exciting upcoming event. This Saturday, March 18th, we're hosting our annual 3-on-3 charity basketball tournament. This is to support MLSE, the MLSE Foundation, and it's a great opportunity to get together with friends and family, form a team, and have some fun while supporting a great cause. Each player who registers will receive a custom designed Pineapple reversible jersey and a chance to win tickets to attend the Rap City Social on March 20th. And of course, bragging rights for 2023 for the winners. The MLSE Foundation's mission is to improve the lives of youth throughout sport and recreation by providing outlets for the underprivileged youth, a wonderful cause, and we hope that you'll join us in making a difference this Saturday. Now, without further ado, I would love to introduce you to Amy Webb from Real Property Solutions, who will speak to and introduce today's session, and presenter Rob Maughan, the Senior Vice President of RPS. Again, I just want to say one more time, please post any questions you have in the chat and we'll address them at the end of this session. Thank you all for joining us today. And Amy, I'm going to pass the floor over to you.
Thank you so much, Melanie, and thank you so much for having us. It's a pleasure to be here. My name is Amy Webb. I'm the Senior National Sales Executive with RPS Real Property Solutions. And one thing I always like to say, and that's why I'm super excited that Rob's here to present for us today, is that we're so much more than an AMC because of all the data that we have access to. So without further ado, I will introduce Rob Maughan. He is the Senior Vice President of Data or Technology and Solutions Delivery at RPS. So over to you, Rob. Thank you.
Thank you very much, Melanie and Amy. Right, so this is a bit of a continuation on a theme. We did a webinar back at the beginning of February, which I think was entitled What the Media Doesn't Know About Real Estate Trends, Prices. And so this is a bit of a deeper dive into what's actually, we think, important information regarding what's happening in the real estate markets. So as a bit of an overview, you know, we do tend to think of the media and a whole bunch of sources that we have access to. You know, it really comes down to the accuracy of real estate price trends and insights in today's market. You know, it's critical for financial institutions, consumers, government and financial services provider to really understand what's going on at the lowest levels of geography in the property markets. So a little bit about me. I was told to put the bio slide in. Anyway, I've been at RPS just over a year now. And really the most important thing you need to know about me is I'm a land information data nerd. And everything I've done in my career over the last too many years to count has been trying to figure out ways to take land information and develop solutions for financial institutions, financial services companies that help them do a better job at whatever they're up to. And a little bit about RPS. We're proud to be part of the Brookfield family of companies. We are under the Brookfield Business Services banner with our sister companies, Bridgemark, which you would know better as Royal LePage, and Sagen, our mortgage insurance company, sister company. And just a little overview of the folks that we do business with. I was able to crack into the master slide and stick the pineapple logo in there for you. But you know, we deal with companies, lenders, insurers, government, all kinds of folks leverage our services to deliver better experiences to their clients. Now that we've got all that good stuff out of the way, I'm going to complain a little bit. 80% of what we do here in the data solutions side of RPS is wrangle information. We have somewhere north of, this slide's a little dated, we have somewhere north of 12 million properties in our database. There are something in the order of 15 to 16 million residential properties across Canada. And every single day we get information updated from various of these sources that we try and collate, normalize, standardize, codify, and essentially try to get it to talk to each other. And we do have data all across the country, which is great because our solutions are able to basically fill in gaps that some of our competitors may not be able to. And this just gives you an idea of the kinds of information that we try and manage on a daily basis as we're delivering out our solutions. I also think it's important to understand a little bit about geography. And the information I'm going to talk about today is all pulled from our house price index. So a house price index, there are three of them in the marketplace today that cover Canada. There's one provided by the good folks at Terranet National Bank. Korea has one and we have our own. And essentially what house price indices try to do is track house price trends across varying levels of geography and various types of homes. So, you know, we think about, we have an index that covers the national view, we have indices that cover the provincial views, but because we want to get down into some really finite geographies, I thought it'd be important to sort of give you an overview for those who aren't geography nerds, you know, sort of how we slice and dice our information in our house price index. So this is a view of the GTA broken down by census metropolitan areas. Across the country, there's 33 of these. Think of places like Ottawa, Montreal, Vancouver, you know, the major economic centers across the country. And so there's a little bit of information. I think Amy's going to share these slides at the end, so I'm not going to delve into this too much. But the next level down from a CMA is what's known as a census subdivision. And our house price index tracks 1,000 of these, which are essentially cities and towns. So you can sort of see now the graphic is infilled with places like Burlington, Oakville, Mississauga, Vaughan, things like that. And again, you know, that's great when you want a general view of what's happening in property markets. But what you really want to do is you want to get down to the next layer of geography, which is what's known as an FSA. It's a Canada Post term, which means forward sortation area, how they figure out where to send the mail on a truck to a central distribution center. And across Canada, our index works on 1,500 of these. So very, very small sets of geography. We like to call them neighborhoods. And it's about the right size to manage the data against as we produce our numbers on a monthly basis. You get any smaller than this, typically you get into situations where the data isn't robust enough to deliver high confidence information. That was far too much information for anybody, but I'm going to keep on going because an important thing about the house price index is how accurately it tracks home values. So over in the fall last year, we noticed everybody understands that, you know, during the first part of COVID and for the years leading up to COVID, house prices across the country were generally going up. And it's a very easy thing to do when housing markets are normal and increasing at levels of say 2 to 3% per year. But when you get into COVID and you see the spikes that happened at the beginning as people were trying to figure out what to do as they sat around the house, hey, let's buy another house. And in more recent times when the market has started to dip, we noticed that our index actually wasn't as sensitive as it needed to be. So we introduced a feature that we call the bank prime rate feature, which is the number that reflects the prime rate at the largest 6 FIs across the country. There is a link here to whichever tables that the Bank of Canada publishes these in. And what we managed to do was by introducing this feature is we got our model to wake up a little better and pay closer attention to what was happening on in these very local markets. And it's interesting to note that not all markets behave the same way when there's interest rate reductions or increases. And that speaks to economic factors, employment, a whole bunch of macroeconomic indicators. But we're quite pleased because it has improved the accuracy of the model and has gotten great reviews from our financial institution customers. Now, all that said, let's actually start looking at some numbers. And before we get to sort of the local pictures, which, you know, provide some pretty interesting insights, I think it's important to sort of take a look at the national view. So this is a representation of a number of the census metropolitan areas, CMAs, across the country from January of 2019 across to the most recent month. I believe this actually does go to February this year, which is great. And what it's showing you is that as you know, as we came into the pandemic, that lovely dotted red line, which represents the interest rates, the bank prime rate, as it was nice and steady, so were the markets across the country. We hit COVID, interest rates drop, everybody gets excited. Let's buy and sell homes. Let's figure out how to move to the country because we can work from home now. Let's cash in, let's buy an investment property, things like that. And we can see that generally speaking across the country, the housing market started to accelerate a bit faster than we'd seen historically. The top two lines here, gray being Vancouver and the dark blue being Toronto, obviously showed the biggest increases. And then as we get into the early part of last year, when the Bank of Canada decided that we were all being a little too fun with our money, and started to raise interest rates to put the brakes on inflation, we can see that the markets also reacted to those interest rate increases, especially the frequency and size of them. So we can see that Vancouver, Toronto, most significantly, started its downward trend. Now, the most recent information we have is showing that Toronto's making a tiny bit of a recovery, but most of the markets are trending down and starting to stabilize. Another interesting view of what's happening in the country is the chart that everybody tells me I can never explain, but I think it actually tells an interesting story. This is the year-over-year price increase or decline by FSA in the country, tracked from January of 2006 to February of 2023. So there's 3 lines on the top and 3 lines on the bottom. And the lines on the top are showing you by property type, aggregate, single family, detached, and condo, the percentage of neighborhoods across the country that are increasing in value. And the lines on the bottom show you the opposite, the number that decrease. And again, as we zoom in on most recent times, we can see that as the pandemic came in, the percentage of neighborhoods across the country peaked out somewhere around 95% of neighborhoods across the country were seeing price increases year over year on a monthly basis. The numbers on the bottom obviously are the opposite. There's 5% of neighborhoods that aren't seeing those increases. And then again, as we see this dotted red line, the interest rates creeping up, all of a sudden it turns. And the market gets back into what we mostly call a more normal, more normal situation. We typically expect that 55 to 60% of neighborhoods are seeing price increases on a month-over-month basis when we compare, January of 2023 to January of 2022. But all of a sudden we look like we're coming into a point of inversion. And I'm just going to step back a slide, because the last time we saw that piece of inversion was back in the 07-08 subprime mortgage crisis. And all indications are, for the moment, that we might see a slightly greater inversion. So more neighborhoods declining in price than increasing. Now, given the recent bank failures in the US and a whole bunch of other information about, the Bank of Canada might actually start decreasing rates. The Fed in the US might hold their position on interest rate increases and things like that. We may see this level off and normalize, but it does tend to take, a quarterly cycle at least before we see information that's giving us that indication. Another thing we have to be careful of when we're sort of reading things in the newspaper, and this is certainly not a slag at anybody at the Globe and Mail or Financial Post or anything, but they only have access to certain kinds of information. And so when we see reports that the average home price, for example, is decreasing 20% year over year, we have to be careful. If you actually look at the Toronto area and you track the types of homes that are selling and what price bands those homes are in, if we look here, the orange line is Q4 2021, the sort of tiers across the bottom, 200 to 10 million. We can see that it's a pretty even distribution of homes selling by price tier. If we accelerate that to the last quarter of 2022, we can see that as the market started to turn, there was certainly a shift into the transactions for lower valued homes. And this is a function of affordability. If you're like my 25-year-old daughter who never thinks she's going to be able to buy a home, it's people resetting their expectations of where they're going to live, the kind of home they're going to buy. And so it's an interesting view on this idea of average value. We always have to be careful when we're talking about averages, because it's underlying information that drives that average, and it can sometimes be a little misleading. So let's get down to some little lower levels of geography and take a look at how bad are things. Excuse me. Things aren't actually all that bad. because it all depends on when that home purchase was made. So if we look around the municipalities around the GTA, we can see that depending on when somebody purchased their home, they have actually done pretty well. And if we look at Toronto here, the lovely blue bar is an example of somebody in Toronto buying a home in January of 2019. So as of today, they're up about 30%. Not a bad return on investment. The orange represents somebody who bought a home in January of 2020. The gray is somebody who bought a home in January of 2021. And on the yellow line, unfortunately, are folks that might have bought a home in January last year. And this is important information because, you know, our lender clients that leverage the HPI, they're trying to track their portfolios and understand if they've got areas of the country where they might be, you know, slightly upside down on LTVs and things like that. But it's also an important thing to remind, you know, the consumers, right? Everybody, you know, for the last little while, the sky has not been falling. It really does depend on the timing of when you bought the home. So places like Pickering doing very well. Brampton, in fact, you know, if you bought a home in Brampton in 2020 or 2019, you're actually doing really rather well on your investment. But in most recent times, you know, Pickering obviously is the laggard here. But if you're in Markham, for example, you're not suffering quite as much. We can then have a look at, you know, municipalities to the north of Toronto, places like Georgina, done well, depending on when you bought. But places like Aurora, Newmarket, and East Gwillimbury, they're not suffering to the same extent when it comes to property prices decreasing over the last 12 months. I think we go east now. Again, there's Pickering, Uxbridge. I guess everybody wanted to live in Uxbridge back in 2019 and 2020. And again, they're actually still positive. So the home values there have you know, maintained, unlike places like Ajax, Oshawa, Scugog, Clarington. And I think we have one more here that talks about the West. Yeah. So Oakville, Burlington, Hamilton, you know, that was all the talk back in 2020 about everybody's moving to Hamilton. It was very affordable. And we did see a tremendous increase in the prices out in Hamilton. But over the last 12 months, you know, prices have slipped. Grimsby, not so much. And Grimsby, again, it's a different housing market DNA. The affordability metrics are better out there. They're still close enough if you need to get into Toronto to commute to work 1 or 2 days a week. You know, it's held its value a little better. Now, let's look at some worse numbers. So we all sort of understand that, you know, spring of 2022, whether it was April, whether it was May, those were certainly the highs last year. And again, if we take a look at all the municipalities that were on the previous slides, this is an example of how bad it has declined in some of those markets. But again, you know, not all markets behave the same way. In fact, 80% of urban city level house price indices for single family detached, you know, they've gone down since last spring. 76% of urban condos, they've gone down as well across the country. And even some rural city indices, you know, they're showing the same trends. But there's different magnitudes of this distribution. I mean, even at the provincial level, you know, BC, Ontario, they're both down sort of 11 and 16% respectively. But Alberta and Quebec, for example, haven't seen declines like that. They're at -5 and -3%. So it really does matter the specific area you're talking about, the impacts that, you know, these macroeconomic factors are having on the housing markets. Uxbridge, again, since the spring highs of last year, it's down about 3.5%. You compare that to somewhere like Caledon, down over 25%. It really does, this geographic impact speaks volumes. Now, because our house price index goes down to the neighborhood level, so that's the FSA, the first 3 characters of the postal code, again, we can see that not all areas behave the same way. So again, since spring highs of last year, our lender customers are tracking these numbers because high ratio mortgages, bumping around the 90% loan to value. In some neighborhoods, those loans could be in distress. And so, you look at different parts of the GTA, certainly, areas I'm familiar with to the west of Toronto, Bronte Creek, Mississauga Valley, there is a 10-point spread on how those FSAs are performing. Now, there's good news out there though, because if we look at the Lakeview neighborhood of Mississauga, where do we have that listed here? Is it on there? Goodness gravy, have I screwed something up? Oh, probably. Anyway, there's a neighborhood in Mississauga that's bordered, for those who know the area, bordered by the QEW, Dixie Road, Burnham Thorpe at the top, and the Etobicoke Creek on the east. And so it's actually gone down, I believe the number is 24% since the spring highs, but its neighboring neighborhood, Lakeview, L5E, which abuts L5X. Oh, see, I did screw that up. Yeah, Burnham Thorpe is L4X. The Lakeview neighborhood, which is directly south across the QEW, it's actually up 8%. And the housing stock in that neighborhood is very much sort of post-war, 50s, early 60s construction, where the homes are affordable, people are topping bungalows, people are doing tear down rebuilds. And so you're seeing, price appreciation in that particular part of the world. So it's really important to get into these really, really finite levels of geography so you can understand what's going on. One other thing that we always find interesting, which is, well, maybe not all that many people find working for an appraisal management company interesting, but we do get some particularly interesting insights into consumer expectations. And so when we look at how well homeowners are keeping up with what's going on in the property markets, we take a look at refinance appraisals that we do. With a refinance, we're fortunate enough to get the estimated market value, the amount of money that the homeowner thinks their home is worth. And we all know there's a certain amount of emotional equity we all attach to our homes. But it is interesting to see how often and in which direction homeowners are able to estimate the value of their home for a refinance. And when we look at periods sort of towards the height of the property market increases in the middle of the pandemic, sort of Q3 2021 through to Q1 of 2022, when the market was still going up, we see that homeowners, generally speaking, in certain parts of the country, we're generally undervaluing their homes, which is an indication that they're not really able to keep up with everything they read in the news and sort of what they hear across the hockey rink and things like that. So a place like London, for example, right at the height of the market, folks in London were undervaluing their homes by about 10%. And if you move forward to the couple of quarters where the market has turned, prices are going down, we can see that generally across the board, homeowners are overvaluing their homes. So there is this sort of lag in their ability to keep up with the markets. A bunch of the products we have, estimators and things like that, we provide to our lender partners and mortgage brokers. We have a house price tracker feature where, if you're trying to keep your consumers up to date with what the value of their home is, we provide an estimate so that we're able to help folks set the right expectation for those conversations. Nobody wants to have a nasty surprise at the end of a mortgage transaction when somebody comes back and says, well, your house actually isn't worth $1 million, Mr. and Mrs. Smith. It's more like 850. That can really put a damper on things. So I might have spun through that a little too quickly, not too sure, but I hope that was some interesting information about the markets around the GTA. Certainly we do have this information across the country, across those 1,500 neighborhoods. So I guess with that, Melanie, should we open it up to questions?
Absolutely.
Oh,
I turned my video on. Awesome. Okay, we are going to open up the floor to questions. We're just going to change host capabilities. Give me one quick second.
no problem. And just a warning to everybody out there, I am not an economist. So I do not have a crystal ball. We can see you now, I think.
You can see us now?
Not, well, I can. I don't know about anybody else.
Lovely. All right. Thank you very much, Rob. That was some great information. Amy and I were sitting here the whole time going back and forth. I was like, this is very, very valuable information. We do have a few hands raised. So if you do have a question, feel free. You can always use the raise hand feature at the bottom of the Zoom account, and I will address your question. And I have a button allowing you to speak. So with that, I'm going to start with Brittany. Brittany has a question, and Brittany, you can go ahead and ask that question.
Hi there. I was just wondering, based on the last slide, like what are the neighborhoods where you find people are predicting or overvaluing their homes?
Right. So the last slide, and I think, Amy, we are going to share the presentation afterwards, so be able to send that around. So again, we're able to do that sort of analysis down at the FSA level, but we tend to keep the information at a little higher geography. So we do it by city. We do have that information across the country. It's something that we use internally to try and help our customers, but it's not something we actually publish as part of our HPI, so I don't want to mislead anybody. But we have that across the country. So if you're thinking about some of those cities that were on the chart, I think London was one of them. That would be the city of London. So it would cover the entire municipal geography.
Right. Okay, thank you.
Great. Thank you very much, Rob. I'm going to move on to the next individual with their hand raised, who is Kelly. So Kelly, I've just taken you off mute. Feel free to ask your question aloud.
Kelly is still on mute.
All right, ask to unmute. Kelly, you can take yourself off mute if you have a speaker. If not, just post your question in the chat box for me.
Chat's not working.
Okay, well, Kelly is getting that mic sorted. I'm going to move on to Nene Atkins. So go ahead and ask your question.
Oh yeah, it's Nene Atkinson. So I just wanted to tell you that the chat is disabled, so we can't type our questions in the chat.
Okay, thank you. So then if anybody has any questions, feel free to raise your hand and we'll allow you to speak them aloud while we're looking into that. Kelly, I can see you still have your hand raised. So let's see if you're able to unmute. If there's anybody else with questions, feel free to use the raise hand feature. Again, it's just at the bottom of the Zoom account. It will pull up perfect.
I think I'm unmuted now.
There you go. You got it.
Okay,
Go ahead,
great.
Kelly.
So you list Toronto as Toronto, and yet one little neighborhood in Toronto is larger than Brantford, which you list separately. Have you done a breakdown analysis of Toronto and the regions there?
Yeah, so well, we have Toronto twice. So Toronto is a census metro I never can say this, a CMA, census metropolitan area. And it's also a city. So I think on the slides where we were showing price appreciation from January of 19 to January of 2023, that information is the city of Toronto as the city. It's not the CMA. You're absolutely correct that there are some parts of Toronto, especially the boroughs, that are bigger than Brantford. But again, we can do all that analysis down at the FSA level. So, you know, in our world, we think of the city of Toronto as anything that has a postal code beginning with M. And certainly we do have the same type of information broken down by all of the FSAs in Toronto. Not sure that answered the question, but.
Well, it's too large a sample size. So for example, what's happening in Agincourt may not be the same thing happening in High Park.
Oh, you're absolutely
just too disparate.
Yes, you're absolutely correct. I think one of the slides where we showed the FSAs, the drop from the spring highs, you know, there's only so much time and so many slides, but we do have that information for the entire city of Toronto. So you're absolutely correct that, you know, Moore Park and Deer Park and all the little discrete neighborhoods that are, again, we have to be careful because the good folks in the realtor space, they use neighborhood geographies that don't quite sync to ours. But if we're looking at FSAs, you're absolutely spot on that, you know, areas like Liberty Village, Deer Park, like I said, Rosedale, even my neighborhood, which I think is the Upper Beach or East Danforth, Maine, or something like that, they all do behave very differently. You're absolutely right.
Great. Thank you, Rob. Kelly, I hope that helped answer your question. We have a few more hands raised, so I'm going to go ahead and unmute Adam Stapley. Adam, you can go ahead.
Hi there. Thanks, Rob. I wanted to ask, and this might be helpful to our realtor partners, because as you previously touched on, there's obviously different neighborhoods that are being impacted in different ways. I know you have your home price tracker, but is there a publicly available information on individual neighborhoods where we can see the individual home price index in that FSA?
There is not publicly available information. We do on our website publish a public set of data, but it is truly at, Amy, you can correct me if I'm wrong. I think we publish it for the 13 largest CMAs across the country, or at least there's one in every province, as well as a national number and a national composite of those 13 CMAs. Unfortunately, my boss likes us to make money, so we're unable to provide, you know, down to that level of geography in a public way.
Okay, can I ask a question to sort of reverse engineer it?
Yeah.
Can you provide information on your on the home price index or the home price tracker? I would assume that you would provide sort of like on that property what's happening in that local FSA sort of on an average basis on how it would impact that property based on its last appraisal value and what's happening in that specific neighborhood. So we could kind of work backwards from there and get an understanding of what the local FSA is doing. Does that sound accurate?
Oh, yeah, actually, and my bad for not having a sample house price tracker report handy. But yeah, so the house price tracker is provides some information at the neighborhood level and some context information at slightly higher levels of geography. And the house price tracker is it's using a combination of our AVM model and our HPI information. So for a particular address, yes, you would see a point value and a range for the particular property, as well as that neighborhood level information. And I believe, might be speaking out of turn, I believe we also give you a little extra information about other property styles in that neighborhood. So yes, for that particular product, you can definitely see what's going on in the neighborhood and the larger city and province.
Awesome. Thanks, Rob.
Can I just add that?
Yeah, so we're actually going to just pause questions for a moment. I'm going to allow Amy to speak to that tracker. She actually wanted to add some information, so we're going to give Amy a moment to speak to that, and then we'll come back to questions.
Thank you so much, Melanie. Yeah, the house price tracker, great segue, because with that report, that's an awesome tool. I know I just did a presentation for your group not that long ago, but phenomenal tool and resource that you can use with your realtor partners and COIs, because you guys can do marketing campaigns with that. You can plug in any address and get that estimated value, and it's a great marketing tool. It's very professionally done. And it does, as Rob was mentioning, it does say the different property styles at the bottom in that neighborhood, and it does go back to 2005, showing the house price for that range. And again, it's branded with your information, RPS, of course, and the client. So it's a great tool that, many brokers have reached out and they've told me stories and testimonials how they've used that with agents and realtors, COIs, and done some joint marketing campaigns. So it's a fabulous tool for those agents on the phone. Reach out to your broker partners, because it's a great way you can do some cool marketing. Thanks, Melanie.
Awesome. Thank you, Amy. That's great. I'm going to bring the floor back to some questions. So Ashish Sharma, I'm going to allow you to go ahead and ask your question now.
Thank you. Hey, Robert, awesome presentation. Thank you for that. Love the data side of everything. I totally agree with you. You said in the presentation that regarding average price, that there could be a chances of outliers as well, and that totally makes sense. But would love to clarify that part. The numbers you showed in all the presentation, like the decline or increase in the prices for last 4 years, does it calculate it based on different metrics, or does it the prices are based on the average price only?
No, so I would point you, if you're interested, to the methodology document that we have on our website. And I will admit to not being one of the data scientists that actually keeps our HPI humming along. Our HPI is what's known as a stratification model. It uses a moving median calculation, and it's a machine learning model. If you think about the Terranet National Bank House Price Index, it's a paired sales model. So it actually tracks repeated sales on the same property. Ours is able to use all the information we have at hand in order to track house prices across the country. It does account for outliers. So certainly we do toss out some of the information that makes no sense. Obviously, there aren't any properties in a place like Rosedale that sell for $150,000. Unfortunately, there are ones that sell for like 28 million. So we have some work to do to make sure that those are captured. But in essence, it's a machine learning model. It's a stratification model. There are a couple other kinds of models. I know Korea's is a hybrid, and StatsCan also has a model, and theirs is a stratification as well, as far as I'm. Oh no, repeat sales. But if you're curious to learn a little bit more about how it works, I believe our methodology document is on the website under the house price index page, and that might give you a little more information about how we generate the info.
Sounds good. Thank you.
Great. Thank you, Rob. This has been great information. Sandy, you are next. So Sandy, you can go ahead and take yourself off mute and ask your question.
Yes, sure. Hi, thanks for the chance to ask. I'm a real estate agent. I used to subscribe to House Price Tracker and, use the emails to clients and everything else. Is there still that kind of thing available as a subscription, and where would I find it?
So, oh, sorry, Rob was going to speak. There's not.
No, Amy, I am not. No, this is your world.
This one's all Amy.
Thank you. So Sandy, no, it's available. That's why I said reach out to your broker partners. So the brokers have access on our portal for free, because it is a service that we give them for free as a valued client. But as a realtor, no, you would have to go through your broker partners. That's why I said reach out to them, and I know they'll do some joint marketing campaigns with you, I'm sure, gladly.
Oh, okay.
Great, thank you, Amy. Were there any other questions? That's it in terms of questions, which means fantastic job, Rob. You've covered everything off. There's no further questions.
I'm
I'll
getting
leave
off
the
easy.
floor- I will leave the floor open for just another moment if anybody else wants to raise their hand. In the meantime, I just wanted to thank you both. This was fantastic. Rob, it's so great for you to come on, share valuable information with us. I know this will be fantastic. I'm excited to use the home tracker myself, and Amy for driving in from just past Huntsville. I know it was a trek for you, so we really appreciate
Happy
you
to come.
making the
Absolutely.
drive in. You're awesome. And then we've got Livia here as well. She's just out in the audience. We can see her from here. So we appreciate you all coming in. This has been very fantastic. I'm going to allow our final question, and then I will end the session. So I'm just going to take Sharif off of mute, and you can go ahead and ask your question.
Just a quick question actually about the slides. Where can I access them?
Right, so I have to PDF them and then send them over to Amy, and I think Amy's gonna hand them off to Melanie or Dennis, and they'll be able to distribute.
Okay, thank you, Robert. It was very informative. Thank you very much.
Appreciate it.
Yeah, exactly. So you guys got it. After these sessions, as long as you've registered for the session to attend today, which you would have done to get on the call, you will receive an email communication that will provide you with the recording of the session, and we'll also make sure to send out the presentation and contact details for Amy as well if any other questions do come up. With that said, thank you once again to Amy and Rob for coming in today, for doing this presentation with Pineapple, providing information to our valuable realtor partners. We appreciate your time, your information, and have a fantastic afternoon, everybody. We'll see you next month for the next Realtor webinar.
Thanks, Melanie. Thanks, Dennis.